With that, let's welcome on board our guest for the evening, Ankur Shah, Chief Investment Officer of Ashfa Capital Management, joins in from Dubai for more on what he's making, not just of global cues, but of course here at home, how things are shaping up. Ankur, good evening. Thanks so much for taking time out for us. Markets seem to be struggling somewhat. It's, steady as she goes, but it looks like we're facing a bit of a hurdle to really break out from these levels. Would that be a correct reading?
See, from my perspective, I think we're still in a long-term bull market, and of course, there's going to be breaks in that. There's never a straight line up, and so my view is that we take a little breather here, and I think maybe with further rate cuts by the RBI and potentially some growth pickup in the second half of the year, I think you could see higher levels. So I think the real risk, maybe from a kind of a macroeconomic policy, would be the Fed raising rates too fast, or the RBI being a little bit aggressive on not cutting rates. But I think that's kind of a small chance here, and I think we'll continue to see higher levels as we move towards the end of the year.
Ankur, you mentioned, the possibility of a rate cut, a 25 basis point rate cut, more or less priced in. Are we, expecting something maybe out of the ordinary tomorrow?
Yeah, I would agree. I think a rate cut would be expected. If you look at the headline CPI number that came in for June, it was 1.5%, so a sub 2% print. I think inflation is well under control. I think a rate cut makes sense, just kind of support growth at these current levels. And I think it has probably been priced in to a certain degree, so I wouldn't expect much reaction from a market perspective. I think if they don't cut, we might see a more negative reaction, but otherwise, I would think it's fully priced in at this point.
Ankur, financials is one area which you track very closely. And right now, if we are looking at PSUs becoming a big drag on the market, however, private financials continue to see buying. How do you analyze both these spaces, which is getting differential kind of a treatment by the market?
I think within the private sector banks, there's actually two areas that are in. So one, you've seen the retail-oriented banks perform really well. They're kind of fully valued at these levels. I think the corporate banks, where you really see the NPA pressure, is where there's, I think, an opportunity. I think as long as the market picks up, I think if we get a resolution to some of these NPA issues, I think you could get a re-rating in some of those private sector banks. And I think in terms of the public sector banks, I think they're going to continue to see pressure kind of on a secular basis as the private sector banks continue to eat market share away from them. So I would still be kind of bearish on the public sector banks at this point.
Talk to us about what you've been doing in your own portfolio last couple of